If it weren't for Nvidia's massive rescue job, the Nasdaq would be in absolute shambles right now. While mainstream tech was chopping sideways, NVDA printed a clean 4% rip, completely reigniting the entire AI block. This move wasn't backed by casual leaks or retail hype. This was Jensen Huang stepping up to the mic, declaring that global AI demand isn't slowing down, it's accelerating. Let's dissect why Wall Street flipped instantly bullish. Before we audit how Nvidia is systematically suffocating the custom ASIC competition, smash like and subscribe. To track institutional dark pool entries and live option delta flows before the crowd, hit the description link. Reviewing the tape, NVDA wrapped the session pumping 4.03% to lock in at $210.96. The volume profile confirmed immediate institutional accumulation following the Morgan Stanley fireside chat, triggering heavy buy-side flow. Jensen dropped an absolute nuclear headline, even as top-line revenue passes a massive $100 billion single-quarter handle. Nvidia's forward growth velocity is going to accelerate. A $5 trillion titan saying it's speeding up is insane. The retail crowd has been crying about a cyclical Capex cliff and local chip oversupply, but Nvidia's terminal data shows the exact opposite. Hyperscale demand is structurally expanding, and big tech isn't tapping the brakes. Furthermore, Jensen explicitly checked the bare rumors regarding hardware delays. The next-gen Rubin Ultra architecture is tracking perfectly on time. The timeline risk that paper-handed tourists feared is completely cleared. The street has also been terrified that custom internal ASICs from Google and Amazon would render GPUs obsolete. But Morgan Stanley just revealed a massive custom silicon pioneer has pivoted back, giving 50% of its workload to NVDA. Whispers suggest this giant account is Anthropic. The market is finally realizing this isn't a winner-take-all commodity war. It's an absolute race for cost-per-token efficiency. If Nvidia delivers superior ROI, hyperscalers pay the premium. Beyond raw exponential growth, macro desks are hyper-focusing on Nvidia's monstrous free cash flow machine. The street is already modeling an aggressive capital return playbook, driven by multi-billion-dollar share repurchases. The asset pulls off an elite dual-threat status. It carries the explosive profile of a secular hyper-growth tech disruptor, backed by the rock-solid cash flow characteristics of a mega-cap value fortress. Institutional lockup is tight. Looking at the Bloomberg terminal, analyst targets span a defensive $250 floor to an ultra-bullish $500 ceiling, with a consensus average hovering near $310. Nvidia is cementing its status as the absolute toll booth for computing. By tactical desk conclusion, the AI trade hasn't peaked. It's entering a high-conviction monetization phase. As long as global cloud Capex metrics keep printing vertical extensions, Nvidia remains the absolute king of the sandbox. Let's test your active technical conviction on this tech sector breakout. Is Nvidia setting up for a straight-line run to print new all-time highs this quarter? Or will macro headwinds force a retest of the lows? Comment below. Recapture are real-time institutional entry clusters, automated options datasheets, and private workspace alerts to front-run the next advanced semiconductor rotations. Tap the description links right now.